This week is setting up for a huge week in terms of opportunity and big moves. In this video, we're going to go over the best stocks to watch for this week, the important things you need to know, and at the end of today's video, we have basically a $1 million trade for tomorrow and then a $770,000 trade for tomorrow. We're also going to take a look at earnings and other important things you need to know. Stick with us today. There is so much to talk about, and just trust me, you need to hear all of this going into this week. Tom, let's get right into it.
Yeah, Mike, it's been a crazy past couple weeks, and last week was especially crazy with all the big earnings going on, and then obviously we had the FOMC event, and you can see the SPY was started really falling down last week with those FOMC events going on, but I will say the SPY is kind of bouncing off this 370 support right now in a really good way, and it looks like 370 might hold up heading into this week. So if we start seeing a nice support bounce on SPY around 370, and then we start to see the dollar continue to move down, I think that'll be setting up a really good start to the week here. Now, keep in mind, guys, we do have some big events coming up at 8:30 a.m. Eastern time on Thursday, where we're going to get the CPI inflation data coming out. So watch for that. That's going to be very important. They're looking for this CPI to actually come in slightly lower, which would be a pretty good thing for the markets if that did happen. But heading into this week, Mike, the dollar's lower. The SPY kind of popped up on Friday, and looking at that dollar on a daily chart, it seems like it is almost on a downtrend here. So if this trend continues, really keep an eye on that SPY. Like I said, Mike, especially early on in the week before the CPI event, I think we could maybe catch some pretty good moves.
Awesome. So let's talk a little bit more about inflation, or CPI, like you said. So basically, we're going to get the inflation data 1 hour before market open on Thursday. This will be so important, everyone. The Federal Reserve has been trying to get inflation lower over the past year, and it is very crucial that inflation actually starts to come down rather than just linger at 8%, because if that happens for extended periods of time, that will just be horrible for the economy. So we really need to see that come down. So that's going to be very important on Thursday. And then Tom, what else do we have in terms of events for the week?
Yeah, so huge events are coming up this week as far as earnings, guys. And it's going to be one of the biggest earnings weeks for growth stocks that we've seen in a little while, Mike. So Monday, we're going to have Palantir report along with BioNTech, and then Mosaic and Lyft, Activision, Take-Two Interactive. Tuesday, we have NCLH, or Norwegian Cruise Lines, Workhorse, Disney, Oxy, AMC, Upstart, Plug, Lucid. Mike, there is so many to name here. Definitely stick with us throughout the week, guys. We will be going over a lot of these plays as they get closer. But looking at these, Mike, there's some big ones even later in the week. Obviously, like Rivian. Then on Thursday, we have Matterport and NEO. So it's going to be a crazy week. And like I said, most of these are growth stocks. So expect some pretty big moves out of some of these.
What's your favorite one for the week?
Honestly, Mike, my favorite one is actually going to be Plug Power. I know that might catch people off guard here. People might have expected Roblox or maybe even NCLH or Disney, but I'm going with Plug Power. I will say Plug Power's chart has been pretty crazy over the past year. It's been falling down quite a bit. It's right at support. And I know a lot of these clean energy stocks have had some good news recently, so hopefully they can start to recover back.
Awesome. My favorite for the week is actually Disney. So Disney stock has been all over the place. When the pandemic hit, it went all the way down to $80 a share, and then it blasted all the way up to $203 a share, and now they're back below $100. It's been a wild ride for Disney. Realistically, they are not going out of business anytime soon, and I'm very curious to see how their Disney Plus subscriber growth is and how they're doing on that side of the business. I've heard a lot of great things about their park side of the business lately, so hopefully that can be great as well. But Disney historically has been thought of as a value stock, but the way it's moving, it surely doesn't look like one.
Yeah, definitely, Mike. Like you said, that high is all the way up there around 203, and now we hit lows of this year around 90, so definitely a big drop there. Got cut in, honestly, more than by 50%, so definitely not good, but it is creating good opportunities for us, Mike. And when I look at Disney stock, I am seeing some pretty good supports here. This $90 support has held up pretty much ever since 2015, besides COVID, where it dropped down for just a few days and ripped back up. But you can see this support has had multiple bounces on it over the past few years. So keep Disney on the radar. And I really hope that they can do better with those Disney Plus subscriber numbers. like you said, Mike, that's going to be a big thing for them. And Disney's one of my favorite stocks going forward. That's for sure.
Awesome. So talking about earnings, we also have to talk about the bad. DraftKings unfortunately just got railed on Friday. They are down nearly 28%. And this is kind of a weird situation in my opinion. So I'll just run through the good and the bad with DraftKings and let you guys decide. But basically, if we look at DraftKings, like I said, it got railed on Friday. They beat on their expectations for earnings per share. They also beat on their expectations for revenue. So basically, they made more earnings per share than everyone was expected, and they made more revenue than everyone was expecting. They also narrowed their loss more than everyone was expecting. They also raised their revenue guidance, which historically is a very bullish thing when companies do that. Now, where the bad starts to come into the play is their monthly unique players, or MUPs, did not increase as much as expected. Basically, right now they have 1.6 million monthly unique players, which is basically the amount of people who spend money on their platform each month. Now, everyone was expecting, or at least the consensus estimate was 1.82 million. So they definitely missed out on that. But at the end of the day, their MUPs, or monthly unique players, is up. It's still up 22% year over year. So they still increased their amount of paying monthly customers by 22% year over year, but it just wasn't enough as everyone was expecting. And that's where some of the downside comes into play. On top of that, their average revenue per MUP increased 114% year over year. So it's like they are still increasing their monthly unique players. They are increasing the amount that their monthly unique players spend. And those are both great things, but it just wasn't as much as everyone was expecting. Another thing with DraftKings is that they are a growth stock. You know, the story to eventually becoming like a powerhouse multi-billion dollar company is not just a straight line up. There's a lot of ups and downs along the way. A lot of people and a lot of investors especially want them to be, you know, go into the positive earnings territory. Some of these companies, like Uber as an example, throughout all of these years are still not profitable. DraftKings is still not profitable. Many other companies are still not profitable, and investors want to see that path to profitability expedited. So that also brought in a lot of negative investor sentiment because DraftKings still isn't profitable like many other companies. Another important thing to know is if we go to the statements tab on DraftKings and then we go to the quarterly viewpoint at the top right, we can see that they currently have $1.4 billion in cash, which is good to see. They have more cash than they do have total debt, so that's also good to see. And yeah, you know, it's been a wild ride. If we look at the dashboard one more time, Tom, and we look at that main chart, we can see that their Q3 revenue was $502 million this quarter. In the same quarter last year, their revenue was $213 million. Year over year, their quarterly revenue is up 136%. So they're still growing like crazy. In these economic times, I still think they have a ton of potential to go. I'm going to continue to buy the dip.
Yeah, me too, Mike. I still like them, and I still think that there's a lot of opportunity for the longer term, especially with legalization as well. So this map just shows every state where DraftKings is legalized, and you can see obviously like in Missouri, it's not legal. Texas isn't legal. Florida, California. So whenever these states start finally getting some legislation passing through their state congressional committees and through their state congresses, we will start to see, I think, DraftKings do a lot better, especially with California and Texas. Now, I know California's had some issues recently with some of the tribal casinos trying to keep power over sports betting. So California might take a little while, but hopefully we start to see more legalization, Mike. And I think that will really help DraftKings stock and help their numbers with their sales and stuff. Like you said, their revenue is still climbing at crazy rates. And imagine if some of these more populous states finally legalize.
Exactly. And like the thing is, at the end of the day, DraftKings is a growth stock. You know, growth stocks at the end of the day do not have great balance sheets, you know? So some people are going to look at DraftKings and say, you know what, I can't invest into them. And that's fine. You know, it's not for everyone. Investing in growth stocks overall is not for everyone. But if you're like if you don't want to weather the volatility, then maybe investing in an index fund would be better. You know what I mean? Like if you're looking for great fundamentals and nice, slow and steady returns, then you shouldn't be investing into growth stocks as it is. But, maybe something like SPY or Microsoft would be better for you. So keep that in mind as well. But like I said, a couple minutes ago, I'm still extremely excited for DraftKings future growth. What other companies are currently growing their revenue 136% year over year? You know what I mean? It's like not many. They still have more cash than debt, and like I said, their whole balance sheet isn't like grade A like a Microsoft, but that's just what comes with investing in growth stocks. Like you said, Tom, if we go back to that map, right now they're only live with mobile sports betting in 18 states, and that only represents 37% of the US population. So it's like we're we're just starting out. You know what I mean? So I'm very, very excited for it. No matter what, whether you like DraftKings or you don't like DraftKings, volatility will be ahead in the future. But I'm very excited, like I said.
Yeah, me too. And I'm really happy that even though DraftKings is down on earnings, it's not necessarily down to lows of this year, at least yet, which is good. So maybe we'll end up holding up at one of these big supports down here, because some of those year over year numbers really did sound pretty good, Mike. Like you said, I know DraftKings is going to be one of my favorites. Obviously, it's been going down a lot this year, and I know that we've talked about it a lot. But guys, just keep in mind, just keep averaging into this stock. That's what I'm doing. That's part of my strategy. I like to sell puts to kind of get shares lower and then just use that to keep averaging in and making my average price lower. I know, Mike, my average price this year started somewhere around $40 with DraftKings, and now I've gotten it all the way down to somewhere around 25 or 26. So you can definitely take advantage and keep averaging in to make those prices lower. And then whenever DraftKings recovers, you guys will be exceptionally happy, hopefully.
There we go. All right, so for this week, Tom, one stock I'm really looking at is GLD. GLD, or gold, has a ton of upward momentum over the past week, but here's the thing with this one. We need the dollar to fall in order for this play to pop up. So either go to the dollar index, which is DXY, or go to UUP. In order for GLD to pop, we need the dollar to fall. So we need UUP to fall, okay? And if it does fall, GLD has a ton of upwards potential. Gold has had a mediocre performance this year, but it definitely has a lot of room to pop back up.
Yeah, it definitely does. I know it's been especially low this year with the dollar running up, and I feel like this is a little bit skewed right now, Mike, because inflation's been running higher, which generally would make people run into gold, but with the dollar being higher as well, obviously it hasn't been going quite as well as people have been hoping for with gold. But I really like this support down here on GLD's chart around 151. That's a really big level. You can see it's starting to really move up off of that. And like we talked about at the beginning of the video, that dollar going down is going to be very important, not just for gold, but also for the overall economy. So I like GLD, Mike. It looks solid, and I really like that as almost like a safer buy and hold for the longer term. I think could end up holding up pretty well. But one of my favorite stocks this week is actually LVS, which is Las Vegas Sands. They had a pretty good week last week, and you can see this stock has been extremely choppy over the past few months, but we actually got some good news with China. They're actually preparing to lift COVID flight suspensions, and we saw LVS fly up on Friday. We also saw Wynn move up and a lot of China stocks. So I'm going to keep my eyes on LVS, Mike. It's a huge stock. They have a big resistance up here around $40.80. And with this good news, it might be finally what they need to break out of that big choppy range that they've been in.
Yeah, so I'm actually looking at KWEB, which also has to do with China stocks as well. They were up around 8% on Friday. Basically, China stocks have been extremely strong lately, and they kind of do whatever they want in terms of the overall market. They have a lot of good momentum, and at the end of the day, they're still very low in the grand scheme of things. I've been seeing a ton of bullish options activity with all China stocks over the past couple weeks, so it's definitely on my radar. Right now, there's a lot of upside potential.
Yeah, I'm really glad to see it recovering, Mike. I know it got so low there for a little while as there was all those crazy China lockdown fears, and obviously people have had a lot of fear of everything with China pretty much over the past year. But it's good to see it coming back. And, with China maybe talking about lifting some of those COVID flight suspensions, that might mean that China is moving in the right direction, at least as far as COVID is concerned. So hopefully this brings a nice uptrend into these China stocks. And, Mike, I'm actually going to go into a bit of a weird stock or a weird topic here. And this is going to be a play more based off of what Elon Musk is doing with Twitter right now. So for anybody who's interested with Elon Musk and Twitter, he ended up taking Twitter over. And I've noticed, Mike, that specifically cryptocurrencies have been doing very well. Like look at Bitcoin last week. It started popping up above 20K and it's actually holding up very well. So I'm going to keep my eyes on Coinbase for this week and the next couple weeks heading forward. I feel like they could end up doing pretty well. Now, they did have earnings on Friday, so keep that in mind, or I should say on Thursday night, but ended up making them get pretty parabolic Friday, but I'm pretty happy with the way they held. So if Elon keeps doing this stuff with Twitter and these cryptos keep moving, I will definitely watch Coinbase. But I will say, Mike, this stuff has been getting funny with Elon and Twitter. I've been seeing some funny stuff where Elon actually threw a fact check on one of Biden's White House posts, which was hilarious. And then Biden came out and says that Twitter spews lies now as they undergo mass layoffs. So pretty interesting. I think that the Elon Twitter situation might bring some pretty good plays into crypto.
Yeah, too bad we can't trade Twitter anymore. It's private now, so maybe Elon will list it again public in a couple years, but I guess we'll see.
Yeah, we'll have to see. I know it got pretty close to that buyout price of 54.20 like we talked about, Mike. And I know a lot of people were buying up some crazy calls and stuff heading into that. But as we found out, that ended up not being the smart play. Obviously, whenever companies are getting bought out, you have to be very careful playing options on those.
Yep. All right, well, let's get right into the momentum plays for tomorrow. With the first one, we have Square to the upside.
Yeah, very nice recovery with Square on Friday. Glad to see them move up with earnings, make them break above that high of day right around 63.65. I have that as a big resistance.
All right, with the next one, we have SPCE also to the upside.
SPCE, wow, Mike, is Virgin Galactic going to make another launch or something? Let's go ahead and make them break above 495. And I know this one can get pretty parabolic.
No doubt. Now with the last one, we have good old Tesla in both directions.
Yeah, so Tesla had a bad drop Friday, unfortunately. They're almost down to $200. So what I'm going to say with Tesla is if they fall below 203, watch for a push down to 200. You might be able to catch a big scalp there, but really even watch it below 200 because if they break that support, it could end up being pretty bloody there. But if they move to the upside and they break back above 210, then maybe look at some calls.
Yeah, 200 is going to be a key support level. It hasn't been at 200 all year, or I guess it was like a little over a week ago, but still, it was only there for a second, and it's just a very key support. So at the end of the day, we are watching Tesla, SPCE, and SQ for potential day trades to the upside tomorrow, only if they break above the levels Tom listed. And then for Tesla, we are also watching the downside levels that Tom listed. So keep those in mind, but it is now time for the crazy, basically $1 million trades for tomorrow. So we are looking at BCS. Very interesting play. We don't talk about this too much. Basically, it's Barclays, the bank. Basically, on Friday, some whale or hedge fund put basically $1 million into the BCS 8-strike call options for March 17th of 2023. For those of you who don't know, when you buy call options, you want the stock to go up. And in this case, they want it above $8 by March 17th of 2023. Like I said, this is essentially a $1 million trade. The thing with this one is that, honestly, the strike is a little bit far. It's not far out of the money, but it's a little bit out of the money. So the smart money is expecting a decent move. All of the bank stocks, though, have had great momentum ever since they reported earnings over the past 2 to 3 weeks. So I like bank stocks as a whole right now. I was really eyeing this play up. I was very, very tempted to follow this whales trade. One risk factor is that it is possible that this could be a covered call.
Yeah, it could be a covered call, but with it expiring in March, Mike, and it only being honestly, now it's only like 85 cents away from being in the money. That is still fairly close. And if these banks do start popping up with rates being higher, as a lot of people are expecting, I would definitely expect BCS to move up. So definitely an interesting whale play, Mike. And I think it's especially interesting that they're starting to get in as we're starting to see like the 10-year yield, for example, starting to slow down a little bit. And same thing with that dollar. The dollar starting to slow down a little bit and drop too as that whale's getting into those banks. So very interesting, Mike. And I know Barclays isn't it's a big bank, obviously, but most people talk about JP Morgan and Bank of America and stuff like that. But don't sleep on BCS. With it only being $7 a share, Mike, you could sell, honestly, some cash secured puts for only $700, which would honestly be not bad. And I haven't looked at the options pricing yet, but it might end up being a pretty good play if you like it for the long term.
True. So yeah, watch BCS. Some institution, it looks like they're betting on it to go to the upside by March of 2023. With the next one, we actually have Baidu, which is BIDU. A whale put $770,000 into the 90 strike call options for January 2023. China stocks are very oversold. It has a lot of upside momentum right now. With this type of setup, of course it's risky, but it actually looks pretty good. It looks like a high risk, high reward setup. When you have Baidu this low and all of the other good, unusual options activity that we've seen over the past couple weeks, it's kind of hard to ignore this one. It really looks like the hedge fund in this scenario is betting on BIDU to make a pretty nice move to the upside.
Yeah, and I could possibly see it, Mike. There's a nice double bottom. We're finally getting some good momentum out of these China stocks. It seems like every time they start to move up, they end up flying back down. So I'm still going to be a little bit careful with them, but hopefully this is starting to form a nice bottom. And looking at Baidu's chart, I've seen multiple bounces down here right around $75 a share, which shows me that there's a lot of buyers down here at the bottom. So obviously somebody's been buying this stock up, and it's been a long time coming, Mike. When you look at Baidu's long-term chart, they have highs of almost 360. Now they're all the way down to 80. Like, what a bad drop over the past 2 years.
Exactly. And these trades with these $1 million trades are actually extremely beneficial. Last week we talked about FXI call options on Thursday, and then the very next day they popped up almost 8%. Of course, not all plays are like this, but the point is still there in the sense of following these $1 million trades can be extremely good going forward. The people who are putting, millions of dollars into these trades clearly know what they're doing. In a lot of instances, they could have access to information that no one else does. So these types of trades are extremely beneficial. Keep BCS and BIDU on your radar going forward. And if you guys like this type of information and these types of trades, make sure to subscribe. We go over at least one of these types of trades in every single nightly video. So make sure to subscribe. When you subscribe, you will see our videos more often. Tom, I'm pumped for this week. There's going to be a lot of volatility. We have some big earnings coming up. Do you have any final thoughts or anything going forward?
Yeah, that inflation data on Thursday, guys, is going to be very influential, so be ready for that. Like I said, I'm kind of hopeful for a nice uptrend here to start the week. The SPY started bouncing up a little bit on Friday, so hopefully we can continue up with that good momentum as long as that dollar keeps selling off. But yeah, it's going to be a crazy week, Mike. Lots of earnings ahead. Really watch the growth stocks this week. You're going to probably see some crazy moves to the upside and the downside both. As we know, Mike, earnings don't always go the way you expected. Kind of like with DraftKings, they had pretty good numbers actually, and then ended up falling just because of those monthly users.
Yep, no doubt. Also, if you guys are looking for daily options alerts, check out that first link in the description and the comments down below. Our option bot has been on fire. So basically our bot calls out options day trades every single day. Last week, some of the best plays popped for 112% in the same day, 93% in the same day, and 37.5% in the same day. Of course, not every single play pops. No software, no strategy is like that. Sometimes it loses, but clearly, as you could see, it has been on absolute fire lately. 13 out of the last 14 plays exploded. It's definitely worth trying out at least for a month for short-term options day trades. We also have option swing trades, long-term stocks to buy, custom bots you won't find anywhere else. A great community where you can chat with Tom and myself all day long, as well as a bunch of other great people. We have a automatic coupon running for your first month. So basically you save $41 off your first month. But like I said, it's awesome. Not every single play works out, but overall it does a damn good job. On Thursday, the BABA 64 strike call options that it alerted went from 146 up to 310 within the same day. So definitely check it out. It'll be that first link in the description and the comments down below. The software we have is software you won't find anywhere else. Definitely check it out. And last but not least, we want to give a giant shout out to today's member of the day in the Stocked Up Discord, which is Mr. Oates. You've been a member for 2 years and your activity has definitely been increasing lately. Tom and I really appreciate having you in the chat. Thank you so much for all you do. And besides that, guys, thank you for watching and let's have an amazing week.